Hello, everybody. This is Brad Reed. I am a real life trader, and I'm here to remind you to be good. And by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. Yesterday, during the morning floor where we trade stocks, do day trades on a webinar, everyone gets to watch and help and pitch in and give their advice. I was talking about a setup that Justin Lindemann called the Pinocchio trade. And I've drawn it here for both a bearish and a bullish trade. But basically, it's when I see a descending pattern forming or an ascending pattern forming. And I kind of give people a heads up, hey, I'm going to trade this. But I don't know if I'm going to trade the breakout of the triangle or if I'm going to wait for a retest. Sometimes, and I would say probably more often than not, when a pattern breaks out, whether it's a triangle, a head and shoulders, a double bottom, double top, whatever, sometimes often the stock will break through the neckline or break through the line that marks the pattern, and then retest the old support as new resistance or the old resistance at new support. So if I were watching this stock and it was forming this descending triangle and I wanted to trade the triangle breakout, I would have my entry just below the bottom of the triangle. My stop, my protective stop, would be at the height of the triangle. So if it did the breakout over here, I would have my stop there, and as it went on, I'd move my stop down, and I'd move my stop down until it triggered. Obviously, once it triggered, you don't move your stop anymore. But similarly, over here, I would have my stop, and on the bullish side, my entry would be just above the triangle. Now, the stock in this case is coming down, and it hits this area, and it rolls up for some reason. Then it finds resistance. It finds the same support, lower resistance, same support, lower resistance. And let's just say for the sake of the picture, it breaks through here. This stock can do two things. It can either fall like a rock, or it can roll back up and retest this old support as new resistance. Now, if I'm trading the triangle breakout, my 2R target would be somewhere around in this area. Now, if it triggers over here, realize if it triggered here, if this thing came through and came down like that, then my target would have to be way down here. It would be twice this distance. On the ascending side, let me see if I can draw it again and be slightly more eloquent, which shouldn't be hard because that was pretty disastrous. The stock's coming up here and going down and doing all this kind of business. If it triggers here, if the stock goes through and my entry triggers, my stop is there, then my target is going to be somewhere up in this area. Now realize that as this thing goes on, if it did not trigger there and it kept going and it triggered here, then this would no longer be my trigger because my stop would have been moved up to somewhere around here, and then my target would be 2R would be there. So as this triangle, as the stock gets tighter and tighter inside this triangle, not only are you moving your stop tighter and tighter, but also your target gets tighter and tighter. And that is it has a lot to do with, do I trade the breakout of the triangle or do I wait for the retest? So if I wait for the retest, actually I wonder, let me come over here and just kind of start all over. Oh, you know what? I can close this and open up a new one, and that'll be a lot quicker. So let me redraw the triangle, and I'll just do the bearish one this time. And then the retest may look something like that. Now, if I'm trading the retest, my entry will be based on where it rolls back up. My stop will be just above either the height of the roll up or certainly just above the old, the bottom of the triangle. So the old support now being new resistance. And just so everyone is clear, I will draw the ascending one. Let's see, that's a bad drawing. If it looks like this on the bullish side, let me get that out of there. I will always set my target at 2R. And if it does give me, when it comes up here and it breaks through, it comes back to retest. Right in there is when I put my entry just above this little roll up. My stop is at the bottom of this roll up, but also below old resistance. So old resistance now being new support, and then my target would be wherever 2R was. So my criteria for choosing, do I do the breakout or the retest, has to do with where this 2R target is. If I can get a 2R target within the high or low of the day, then I will do the triangle breakout. If not, I'll wait for the retest to see if I can get a 2-to-1 ratio there. If I am doing a high of the day or low of the day breakout, so meaning that the stock is now doing an ascending or descending triangle at the extreme of the day. Sorry, I have to launch two softwares here at the same time to get it to share my desktop. So let me start that over. If a stock is challenging the high of the day and forming an ascending triangle, I will look at where my 2R target would have to be. And if my 2R target is beyond about a 4% move of the stock based on the open, then I will wait for the retest. And similarly, if it's a descending triangle challenging the low of the day, and I can get a 2R within about 3 or 4% move of the stock price, then I'll do the triangle breakout. Otherwise, I will wait for the retest. So let's go take a look at some examples. And here we go. So LCI was doing some interesting stuff very recently. Well, it looks like we're going to go to OKE. So OKE is one I was watching yesterday. And here is the triangle that I drew. And let me see if I can redraw this in a little bit brighter color. So the retest is when this thing rolled down to there and rolled back up. So if I were trading, okay, that's interesting. So it came down here, then rolled back up. So if I were trading the triangle breakout, I would have my entry down here at the bottom of this thing. And I would have that as a trigger. And my stop would have originally been up here. And I would have said, okay, where's my 2R target? And my 2R target would have had to have been way down here somewhere. So I would not have made that trade. But as the triangle continues to get smaller and smaller, I can move the stop down to there. Then I can move it down to there. And every time I move my stop down, remember that my 2R target comes up. So let me be precise on this one. Sorry about all this drawing craziness. Let's see, where is the end of the day? That's May 7th, that's May 7th, May 7th, this is May 6th. So it ended up looking just like that. So when this thing triggered, the last swing high was this bullish candle right here. So the high of that candle is 45.84, and the low of this pattern is 45, call it 45.54. So if the low of the pattern is 45.54, I would have adjusted my trade based on that candle. If the low of the pattern is 45.54, my entry would have been about 45.52. If the height of that candle was 45.84, I would have had my stop at 45.86, and then I would have checked if the 10 exponential moving average would have been in there, and it would have. My risk is 34 cents, so therefore my target would need to be 68 cents away. And this is the picture of what the trade would have looked like. Actually, let me move that back, because that one, yeah. So what I'm doing, I'm cutting off the next day. So this is how this trade would have panned out. And as you can see, the 10 exponential moving average was within the stop. So I would have made this trade if I was watching it. 2R target is within the low of the day. That would have ended up being a 2R trade. May have gotten stopped out on this wick right here on that candle, but that looks like it may have happened really fast. You may have gotten down here to 4R, so probably somewhere between 2 and 4R for that trade if you traded the triangle breakout. Now let's look at if I would have traded this rollover. Darn it, I keep moving that. If I would have traded the retest. So the bottom of the retest would be 45.24. So the entry would have been at 45.22, 2 pennies below the low. The stop would have been either the high, 2 pennies above the high of the retest, or just above the floor of the triangle. So the high of this was 45.24. The floor of the triangle was 45.54. So my stop would have been at 45.56. That's a 34-cent risk again. So 68-cent risk reward. And that puts this trade, you might have gotten stopped out on that risk, or you would have gotten 2R. But either way, this is an example of where the triangle would have been a better trade than the retest. However, remember, you don't get to see the retest when the triangle breaks out. So my rule of thumb is if you can get a 2R reward risk ratio from the breakout of the triangle, take it. If you cannot, wait for the retest. But again, this is an example of the Pinocchio trade on OKE. DDD was the one we were looking at yesterday when the morning floor was ending. And here I've gone ahead and drawn the picture of the retest. Now in this case, the retest would have given me a 2R target, 1 penny below the low of the day. So I would have taken that, but I would have exited half my shares at the low of the day, 1 penny above the 2R target. And as you can see for this trade, it would have come down here to 4R. Now, one thing I want to say is that the 10 EMA did not get to the stop until after this would have triggered. So if you had done if you'd done a buy stop entry, I'm sorry, a sell limit would have been your entry because it already would have triggered. You might have gotten entered in on this wick back up into above the entry, but maybe not. So it's questionable if you could have entered on this retest. However, if you had, likely would have gotten somewhere between a 2 and a 4R trade on that one by trading the retest. If you had waited for the triangle breakout, your entry would have been 2 pennies below this, so call that 22.93. And the stop would have had to been a little bit above probably this candle here. So the high of that candle is 23.20. So 23.22 would have been about the most aggressive stop I would have considered. That's a 29-cent risk versus the retest was a 9-cent risk. This one's a 29-cent risk. So we need a 58-cent reward. And that's what that looks like. It would have been profitable if you would have taken it, but I would not have because my 2R target was well beyond the low of the day. So this is an example of when I would have waited for the retest. And if I had, the overall trade would have been much more profitable with the retest. Now that was May 6th, and this is all in hindsight. This is when I've been looking at today, actually, LCI. And here is some drawings that I have made. It looks like what I've drawn here is the retest. So let me clean up my picture just a little bit. And as you can see, it was forming this descending triangle. Let's check the possibility of trading this on the triangle first. The height of, let's see, my stop would have had to have been above this one because, let's do the entry first. My entry likely would have been probably this guy. 55.39 was that low, so let's call it 55.37. 55.37. And then the most recent swing high was this guy, 56.55. So my stop would have been at 56.57, 2 pennies above that. That's a 120-cent risk, so a 240-cent reward. Puts my 2R target just a tiny bit beyond the low of the day. I doubt I would have taken that trade. So I would have waited for the retest, which happened here. And I'll just go ahead and redraw that. Let me see if I can zoom in even a little bit. So this is the retest as it broke through the floor here, made a low, made a swing high, and that is the trade that I would have considered right then and there. The 10 EMA is within this wick, so it looks great. The low there is 54.81, and the high here is 55.47. So if the low was 54.81, I would have had 54.79 as my entry. If the high over here is 55.47, I'd either put it 2 pennies above that or above the floor of the triangle, and in this case, this one's higher. So my stop would be 55.49. That's a 70-cent risk, as opposed to the other trade was a 120-cent risk. So I would be looking at a 140-cent 2R target. And in this case, the 2R target is within the low of the day, so that is a trade I would be more apt to take. So here's a live view. I am not in this trade because I was recording this video when it triggered, but looks like a great trade. Yeah, so that's how I do what Justin Linderman calls the Pinocchio trade. It's where I'm looking at a descending triangle or the retest, or I'm going to trade the ascending triangle or the retest if it is a bullish trade. For questions or comments, please email me, brad@reallifetrading.com. For more videos like this, go to www.reallifetrading.com. And as always, trade on logic, not on hope. Have a good one, everyone, and thanks for watching my video.